From the morning reading, small cap IWM makes new high as broader spiders and Qs pause following a strong week. 2 of 10 sectors moved higher and 1 was unchanged on Friday. XLE, XLRE, and XLF were the strongest sectors, while XLV was the weakest sector. Oil futures were up 82 cents to close at 46.32. Breadth weakened compared to the prior session as decliners led 1593 to 1426 on the New York Stock Exchange and advancers led 1500 to 1265 on the Nasdaq. On the S&P 500 snapshot, Friday doldrums, Treasury sell-off accelerates. The S&P 500 spent the week alternating between daily wins, Tuesday and Thursday, and losses, Monday, Wednesday, and Friday, with the 2 wins trumping the 3 losses. Despite today's modest negative 0.24% close, the index finished the session with a 0.81% weekly gain. More dramatic was the acceleration in the Treasury sell-off. The yield on the 10-year note hit an intraday high of 2.36%, the highest since early December of last year. It closed the session at 2.34%, up 19 basis points from the previous weekly close and up 55 basis points over the past 2 weeks. Freddie Mac puts the latest weekly average of the 30-year fixed-rate mortgage at 3.94%, about 0.5% higher than it was a month earlier. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I'll provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:05 a.m. Mountain Time, and I'm recording this in preparation for the market day of November the 21st, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Okay, let's go ahead and jump into the morning report. At time of this cut, all 4 of the U.S. broad-based indices were positive, albeit slightly. S&P futures were up just above scratch, as were the Russell futures. Nasdaq futures were up about 0.25%. Dow futures were up just above scratch. Big move, though, in crude, up about 2.05%. Euro's up about 0.33%. Bonds up a little less than 0.25%. And gold is up about 0.5%. In overseas action, looks like everybody was open. China was up about 0.75%, Hong Kong just above scratch, Japan about 0.75%, Germany about 0.25%, and the United Kingdom about 0.33%. And macroeconomic reports for the United States of note for today, there are none. Looking forward to tomorrow, we have existing home sales, and that's about it. Now, of course, Wednesday, there'll be a number of important reports, but remember, Wednesday's action will be likely stunted with many people leaving midday. And then, of course, Thursday, the market will be closed. And then Friday, you'll have technically the market open, though very, very, very little trading. And most traders will actually be gone, and many people actually consider that a trade holiday, though an unofficial one. So just kind of be aware that you have all that coming up later this week if you weren't already aware. In terms of market conditions, our current volatility conditions extremely low. Short-term VIX down to an 8.63, about as low as we've seen in quite some time. Skew is just in the caution area, just barely, at a 126.4. IV percentiles also quite low, all of them below a 20. The S&P a 17, the Russell a 20, the Nasdaq at 18, the Dow a 19. No standard deviation moves were put in on Friday on a close-to-close basis. Okay, let's go ahead and go to the charts. So on our S&P futures charts, you see we continue to bump our head against this area of resistance a little bit of a probe into that area of resistance and then backing off from that on Friday's session. So far today's session, we've run up against that same area and then are sitting there at this point. We'll see what happens when more energy and momentum come into the market, potentially with the cash open in a little over an hour from now. But right now, this area of resistance continues to hold, and that's what resistance is expected to do, hold until proven otherwise. So, and this is a pretty important area of resistance. We've been talking about this in recent sessions. Lots of touches here. So, and the fact that we've now run up and thus far 2.5 days up against this same area and been unable to get through it is rather interesting. But that doesn't mean we can't get through it at any time. I don't see any macroeconomic report activity or anything like that that's likely to get us through that today. But you just never know what the stimulus is to finally break through to a new high. Obviously, short-term, extremely bullish up against the top of the range. Just a difficult place to initiate new bullish positions until you break through that area. On the Dow, of course, it did break through its area of resistance and then has consolidated in a sideways pattern since then. So, also quite bullish, but seemingly a bit exhausted, at least in the short term. Nasdaq, of course, has been trying to get back to its former all-time highs and has managed to come up from the bottom of the range up into the middle of the range. A bit of a cloud breakout on Thursday, but has gone sideways since then. And then the Russell futures, right at the top of this channel that goes all the way back to the beginning of the year. So huge move in the Russell course from an undercut below this channel all the way to the other side of the channel, straight up without a single red candle to be seen. And I think, what is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Now we're now working on the 12th trading session in a row without a red candle. So very, very extended in terms of normal movement in the Russell without a retracement. So we'll continue to watch that as well. In other markets, crude oil continues to move up off of its fib bounce from several sessions ago. Though in the big scheme of things is in a very neutral position, about halfway between the top and bottom of the intermediate term range. A big part of this, of course, is what's going on with the dollar. The dollar's actually been doing something of a pullback today, albeit from Friday's all-time, I should say all-time, 52-week highs. We still have all-time highs on the dollar that are higher than that. And then, of course, that also impacts gold. Gold is a little bit of a bounce today, as you've seen the dollar going the other way, but very, very weak. And then also, let's take a look at bonds. Bonds also extremely weak with recent action, just totally breaking down. Nothing yet showing us anything that's significant, and other than just bear flag bounces in the bond market. And then let's take a look at volatility. And volatility, of course, has been getting very low, and we're down to a 13 and change at this point. So nothing really signaling there an increase in volatility. So nothing really signaling, an expectation for anything negative to the equity market. Also not signaling anything particularly positive for the equity market right now, other than the fact that we're in short-term very bullish patterns, but up against exhaustion patterns, it would seem, all four of the indices, waiting for some new stimulus to either push that on through, especially on the S&P, or to set up some sort of retracement, which would probably be a bullish continuation pattern, but at this point remains to be seen. I think that's probably enough on the charts. Let's go ahead and go to the daily report. Okay, and the first thing, the intermediate term phase opinion is bullish with a market phase 2 trend reversal. The 3 market timing signals continue to show some improvements. The first one coming to us from IBD, confirmed uptrend, that's bullish. GMI index, a perfect 6 out of 6 of the buy signal that's been in place since 11:10. And the GMI 2 is also a 7 out of 8. And the third signal from Decision Point Scoreboard, we have some new signals, including an important intermediate term signal coming in now, as well as the Nasdaq solidifying its short-term position. So on the short term, all green and all 4. On the intermediate term, we've got the Dow leading, as you would expect, with a solid green set of signals, but the S&P 100, 500, and the Nasdaq 100 giving us still mixed signals. And that's against long-term mixed signals. So we continue to see slowly but surely improvement across the Decision Point Scoreboard, and yet in the longer time frames, we still have very mixed signals, not bearish, not bullish, not either, just kind of neutral. So we have to keep that in mind. So overall consensus is for a much improved market with a bullish bias, but still not a clear stack, especially coming from the S&P on the decision point. In terms of position models, position sizing opinions on those models, both models are still at 100%. Intermediate term market posture, severely strong bulls coming in on all 4 indices. In fact, could hardly get much stronger, and also supported by a weak bullish sentiment line. So nothing particularly bearish to be seen there. The strength of the trend has improved. We've normally when this line drops below at 80, we expect things to get pretty serious, and really has not followed through with that as of yet. Right now, it is pointed back up, and but is below the 80. So kind of keep that in your thoughts. Hedge warning status remains level 1. Will remain at level 1 until we get a better stack on that Decision Point Scoreboard. Strategy opinions. There were a couple changes here. First of all, in option income strategies, the VIX is within the acceptable range to initiate new positions for novice traders. That is no change there. But in covered calls, we've changed the ratios here in the opinion. We still have it for both covered calls and put selling. Conditions acceptable to initiate new positions for novice traders. With the covered calls, we're suggesting that traders should consider a 1-to-1 ratio now of in the money and out of the money strikes. Also a 1-to-1 ratio of low beta versus high beta positions. Be very selective about your low beta positions. Some of the sector rotation that's currently still going on in the post-election period is going and hitting some of these low beta areas like the REITs and so forth pretty hard. So anyhow, still defensive, but not quite as defensive as we were a week ago with the 2-to-1 ratios that were on both of those suggestions. In terms of specific warning areas, you could see in the volatility area, we have 2, but the Nasdaq has been coming down slightly, still in warning status in terms of distribution day count, and the skew is just barely over the warning status, about a 9% probability of a 2 standard deviation move in the next 30 days. Trend-based, everything's fine. In fact, a strong bullish indicator here with the New York Stock Exchange new highs, new lows, and the key intermarket risk aversion indicators, everything is risk on, all good there. And then in the fear and greed index, slightly to the greed side, but just barely above the overall neutral area. In terms of sector specific, you could see the winners on Friday were telecom, energy, financials, and real estate, albeit pretty small percentages on 2 of those, mostly a negative day. by the other sectors, and then also by the breadth within those sectors. Losers for the day of significance: healthcare giving up a little more than 1%. In terms of sector specific market postures, you can see the impact of that sector rotation at this point, and things have started to really kind of line up across the time frames, with consumer staples, healthcare, utilities consistently down across all three time frames, where on the flip side, things like financials and energy and industrials, other things, all consistently up. So really starting to see that sector rotation come into play and show some consistency now in those moves. As we'll see more out of this action, if it continues to follow through, we'll start to see this show up better in terms of actually achieving something. And you see the financials green across the board here. Industrials nearly so, just barely below a scratch day on Friday, but really more consistent across the different time frames. Energy also consistency across the different time frames. So technology has been improving of late, had a bit of a down day on Friday. So a number of these sectors that have been improving versus the sectors that have been taking more of a hit of late: healthcare, consumer staples, utilities, all certainly in that category. In terms of the relative rotation graph, you see this impact from the sector rotation here as well. You have regional banks, probably the best looking industry group right now, whereas you have things like some of the tech with internet, with FDN, and XBI, which is your biotech. It is kind of rolled back, though it had something of a bounce in the most recent week. XSD, which is semiconductors, your tech has been, starting to stabilize at the same time. It certainly was well off during the immediate post-election period. And retail starting to show some signs of better improvement. And IYT, which is your transportation, has been relatively consistently, up here in this top right quadrant. So best performing transportation and regional banks. Keep that in mind. You might want to take a look with your watch list, not either at the industry group itself or the best components within those industry groups. Okay, I think that's probably enough for today. I'm going to go ahead and scroll through here. If you see something of interest, just hit the pause button and get your details, get your hyperlink to get to additional details on some of these. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. Also note the hyperlink down here at the bottom for the full set of disclosures. We'll see you back here tomorrow for the Falcon Global Market preview before the market opens tomorrow. In the meantime, manage that risk and seek to go out there and learn something about your trade craft each and every day. Good trading.